So, you've heard a bit about reverse mortgages, but not sure if they're right for you. We've put together a quick explainer video so you can help paint a clearer picture before you decide to go ahead. A reverse mortgage is a loan secured against your property, which is designed for eligible older homeowners. Not necessarily. In most cases, you remain the owner of your home. The important part is understanding how interest compounds, what happens when the property is sold, and whether it suits your goals. My biggest tip before you make any decision, make sure you get personalised credit advice and ask plenty of questions. With a reverse mortgage, normal monthly repayments are generally not required while you continue living in the home. But that doesn't mean the loan is free. Interest and fees are added to the loan over time, which can mean less equity built up in the property. You hear people say, use your home equity, but what does that actually mean? Home equity is the difference between what your home is worth and what you currently owe on it. For some retirees, that equity can help fund things like aged care needs, home improvements, medical costs, family support, or a more comfortable retirement. The key is deciding whether accessing it is appropriate for your circumstances. Let's explore the options before you make any big decisions. The biggest thing people misunderstand about reverse mortgages is interest. Because you generally don't make monthly repayments, interest is added to the loan balance. Then, interest can be charged on that growing balance. That is called compounding. It can be useful for cash flow, but it needs to be modelled properly so you understand the long-term impact. Ask for projections before you sign anything. Can a reverse mortgage leave your family owing more than what the home is worth? For reverse mortgages taken out in Australia from September 2012, negative equity protection applies. That means debt should not exceed the market value of the home when it is sold. Still, your equity can reduce over time, so it is important to understand the numbers. If you are considering it, get the projections explained in plain English. One of the hardest parts of getting a reverse mortgage is telling the kids. Many retirees worry their children will judge them or think they are being irresponsible. A good process should include clear education, time to think, and, where appropriate, a family conversation so everyone understands the benefits, risks, and what happens later. Need help preparing that conversation? We can guide you through the questions to ask. Is a reverse mortgage only for people that have run out of money? Not always. For some homeowners, it might be part of a broader retirement plan. For others, it may not be suitable at all. The point is, not to rush into it out of pressure, fear, or embarrassment. Explore the option early before it becomes urgent. What if selling the family home is the last thing that you want to do? A reverse mortgage may help some people access equity without selling, but it also affects future equity, estate planning, and flexibility later. Let's look at whether staying put is realistic and what options are available. Your home is your biggest asset, but what if it needs work? Some retirees use home equity to make the home safer or more comfortable. Bathrooms, ramps, roofing, air conditioning, or maintenance. Book a chat and we can walk through the pros and cons together before you make any decision.